Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today at the lab. Can I please get a screen and audio check in YouTube and the Bookmap Trader Lab community? All right, great. Thanks, everybody. Well, welcome to the Trader Lab. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. A couple little announcements here for you. The Bookmap Academy has a session change. It'll be there's a event scheduled. You can check it out. It will be starting today, and instead of on Thursdays, it's going to be on Tuesdays. Bookmap Academy is made up of trading coaches, and they can help you review your trades, give you some coaching support, you might say, on your ideas, give you just some things to think about. And these are traders who've come up through the Bookmap Academy and are now coaches, so you can take advantage of that. Also, Bruce's pilot program, which you might have heard about, it's really about helping you understand what an edge is. And I always talk about edge as far as the nature of the business that we're in, because we're not in a predictive business or this thing about needing to know or confirmation. And I understand psychologically we all want to know because we want to avoid risk. And it is a logical need, but it is really based on a psychological need, not really what the business is. So edge is a statistical probability, not a predictive thing. I hope you can kind of get the sense that there is a big difference between needing to know, needing to avoid risk, looking for confirmation, and not looking for those things, but instead extracting metrics that give you an edge. And this is very much how gaming works. And Bruce's pilot program can help you move in that direction. The other thing is we have currently, for the month of October, let me just see where the if you do submit your screenshots and annotations of trades you've taken in Bookmap, you can earn 3 months of Global Plus for free with data. Just use hashtag FreeBlueJacket, drop it on X, Instagram, or LinkedIn, and you're automatically in there. So a couple things for you to be aware of, and you don't want to miss out. Now, I think I left something out here, so I have to get back. One moment. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room. However, if we get there, we can talk. Now, let's take a look at the hierarchy of process. And this is something I think every trader needs. In fact, every trader does need to understand in the sense of how they slice and dice the market. The market is not one-dimensional. It is really a function of the condition of the market. And this is based on something called auction market theory. We use a volume profile as a chassis to overlay trades on. What time frame do you trade, and what is the condition of the market? In other words, context. This is maybe the hardest part of trading, is knowing that all environments that we operate in are not created equally, and that trades that might qualify and have an edge in one condition do not have an edge and are not qualified in a different condition. That is why most traders, in my opinion, cannot sustain themselves, because they're trying to get a generic process, one size fits all, and it doesn't work that way in trading. And just to make it more interesting for you, this changes as the session progresses. So one condition may exist early, and then the condition changes. And if you're in Trader Lab, you would actually be able to develop an understanding of which trades are qualified under certain conditions. And then when the condition changes, which you would have a narrative to define, then those previous trades don't qualify, and then you might have other trades. The idea is only deploying trades that have statistical probabilities that favor you. I hope that makes sense. And then there's Bookmap, which is our tip of the spear, as I call it, the order flow tool to help you see inside the rotations for more micro structure, execution, trade management, and different elements that you can develop over time. Now, in the Trader Lab, there's 60 PDFs of structured trades that I've shared, and I'm an educator, but this is not a trading course. There's no cost for this. This is, and it doesn't matter how long you've been trading, but these 60 PDFs will give you some ideas of process, but you have to reverse engineer each of these. And some of this down here was research I was doing with Bookmap developers, and some of them ideas have been incorporated into Bookmap add-ons, and most of it, as we know with research, goes into the proverbial round file. This is from 2020. So these are just some things I shared. Traders were asking me, what are you doing? Here's a bracketing algo. I was actually in a short here, and the bracket that lifted here, pushed here, that's like a kick in the pants and somebody taking the lid off the pot. I exited as soon as I saw that. That's my actual exit. This is a live trade, and then the market exploded. Just saying, order flow can give you an edge if you learn how to use it. And there's a lot of education, of course, in the Bookmap server. Let's try to get going here. And by the way, I apologize. I am on a laptop in Mexico, so one never knows. You know what I mean? So this is the higher time frame. Now, yesterday we had a gap higher. We left the gap under here, and then we had a nice move up. What we need to remember is 6707 is called the naked volume point of control. Now, forget the language, naked, and close your eyes if you get uncomfortable. Really, what this is the highest volume in here. Now, auction market theory is shopping, so we don't have to get all carried away with the theory like we're a bunch of scientists running around. Basically, it's volume. Shopping is volume. Retail is volume. If the market goes up and the highest volume is here, that is the area of acceptance. In other words, yeah, we're all willing to pay this. And then we gap higher. Well, this gap is unauctioned. That means the market hasn't done any activity here, and the perception at this time was that this retail price is too low. So then we gap, and we went and gap and go yesterday, which is a long-only scenario, unless, of course, you have an edge in shorts, and that's up to you. And then the new retail price is 67.73-ish. And the target above runs about 90, and then the all-time high is here. So I just want to show you the lay of the land. Now let's go a little further. This, starting over here, let's see what we got here. This is yesterday, and I grabbed this right on the open. So we had our naked point of control. I just showed you the retail price, and then we had our gap. So this is the low of yesterday. So between there and there is a gap. And then the market started moving higher. Our target for the day, and this is put on yesterday, if you watch yesterday's stream, this is what you'll see. This was our potential target. Now, potential, and by the way, in trading, there's no precision. So we have to get over knowing where it's going to go, okay? But ballpark, as I like to say, horseshoes and hand grenades. So this is a low volume, and now this is yesterday, okay? We have our gap below. We have a low volume area. This is called a single, and this is located around 55. What this says is that we can come back here. Now, if we get below this into the gap, we can go back to previous day's low. But in the meantime, this was our target. So for me, not so much. You know what I mean? Like, this is fine. So it was longs heading towards here, and we got pretty close. So that's where we left off on yesterday. Is everybody with me so far? Is this making some sense? How we doing in YouTube? You guys following? So now let's go to Bookmap and let's start with the RTH Open. If you have questions, please post them. This is a Trader Lab. This is about the business of trading. There is no holy grail. If you got one, come over to Trader Lab, clue us in. But in the meantime, let's take a look at the market. Now, we are opening, this is the RTH Open, at yesterday's fair price. What that is suggesting is nothing has really changed. We're opening in value, developing value area low, value area low, where 70% of the volume took place, and value area high. Yesterday's high, yesterday's low is below us, so we're opening in a fair area. What that suggests at the moment, nothing has changed. So if nothing has changed, that means then we can have what's called an open auction. Open auction is just profilage, as I like to call it, or language of the profile, and it means both sides. So it's kind of like, well, let's see what's happening here. And we can anticipate a low activity kind of day. In other words, a rotational day. And it's possible that we can check both sides. In other words, we can go up and then we can roll down and take out the longs. Now we know the higher time frame is up. So it is possible that we lean to the upside, but we can go both sides. So we can take out the first hour's high, we can take out the first hour's low, and we can just slosh. So the higher time frame is up, but let's come back to another concept. What is the condition of the market? Well, two conditions. One, the higher time frame is up. The second condition is this thing just went on a sprint with a gap, and the market might rest or consolidate. So we know that. We also know that if we're going to open in a fair price. Think about this. You go to shop in the store, you open at a retail price. Let's say you go to buy your tuna, it's $1. And then for whatever reason, the tuna goes up to $1.50 and you go, I'm not going to pay it. And then it rotates down to 75 cents and it just rotates around. So if it goes on sale, you buy a little extra. You will pay retail because that's still fair. But if the price gets too high, and then this rotation takes place, and it goes just both ways. But the higher time frame trend is up, so we might still go with the higher time frame. But because the market is currently long, that means we got longs in here from yesterday, okay? And we know we're near the all-time high. So the rotation might take some of these weak longs out. So you have to be thinking always, especially when the market opens in a fair price, that we're going to slosh for both sides. And also keep in mind the higher time frame is up. So the hard part, I think, about balanced trading is the patience it requires. So this is not yesterday. And the important thing to understand in trading is it is not one size fits all. So, and most of us, when we're developing, we just want our little oscillator to cross over the line or the spaghetti to do something, and then we're going to do it, right? But that's not really how this works. So if that's what you're doing, don't worry about it. We've all done it. The thing is, if you don't have an edge and you don't adjust and you don't have different plans for different conditions, you're always going to be, as they say, behind the 8-ball. And speaking of an 8-ball, we had one on the trade desk. That didn't do any better than anything else. So RTH opening at a fair price. Is everybody with me? How are we doing in YouTube? Everybody conscious? Don't hit your head on the desk. And please give a like. Okay, this is Trader Lab. Let's get going. Now, this morning, when I was looking at the market, I could trade it from either side, but I always caution traders, patience. Yet, when we get the open, many retail traders are going to be seized by FOMO, especially if they didn't participate yesterday. This is where emotional states come in. If you got alien language, I don't know what that is. They're going to feel FOMO. It's going to be carried over from yesterday. Gee, I didn't get any yesterday. The market went up. I sold it. I took 2 stops. I hit whatever it is, right? Or, I took a long, I got stopped out, and then the thing went without me. Mentally, you're going to come here today with the idea, I got to make it back. Is that in the back of your head? That's hide. You really need to learn about not only your trading, but yourself. Yourself will become the biggest obstacle, in my opinion, to sustainability in this business, not learning to trade. I believe anyone who comes to Trader Lab can learn how to trade. But if you don't spend time learning about yourself, you're going to have a problem because you won't understand what's driving your behavior. And if you can't understand your behavior, you're always going to be under control of something else, not the business, which you should vet and understand. You'll be driven by your emotional states, and your emotional state is not related to the business. It is chemical. It is about validation of yourself, your self-worth, your avoidance of risk, the need for confirmation. All those things that we use successfully in the outside world don't work here. So we bring our beliefs here, and they're not aligned with the business. How can you operate in a business where the rules of the outside world don't work here? Because they don't. Randomness is something we avoid. We want certainty. I mean, we're wired for it. And I always like to talk about this because traders don't understand what they're really pushing against. And that is trying to adapt this business to their beliefs and psychological needs, not adapting themselves to the business. Big difference. Now, this is the RTH Open. Remember, we're looking at two-sided trade, and I'm going to say, hey, go figure, right? So we know the higher time frame is up. We know the market is long. So this is a difficult environment to trade in. And we're opening, and here's the catch, as they say, the fly in the ointment. We're opening at a fair price. This is like saying my tuna's $1. Are they going to raise the price? Or are they going to lower the price? Now, here's another piece. This is the ETH volume point of control. It's really the same as that, except here's the difference. This was the highest volume from the RTH from yesterday. This is the highest volume from the last auction, which is the ETH. So what you have is retail price here, retail price there. Oh, there's something else I got to show you too. This was that target from yesterday. There's yesterday's high, and that was our target. I considered that a direct hit. I always use the term horseshoes and hand grenades. This is the ETH high. So basically, this is our outside edge, okay? And notice what comes in up here, just saying. Now, the other part of this is, here's the ETH low. Okay? And that's near the value area low. So that is saying is slosh. So I know when we come in, slosh. Now, let's pull out our context grid sheet that I've shared in Trader Lab. And this is all prior, by the way, to putting your first trade on. Does this seem like you don't want to wait? You're in a hurry? Well, you know, by the way, the monkeys, Randy, I'm not in Costa Rica. I'm actually in Mexico at the moment. But I will be in Costa Rica in about a month. So about a month here in San Miguel de Allende, which is a beautiful, it's up in the mountains in Mexico. So I'm over here for a month, and then probably about 2 or 3 months in Costa Rica. So this is the wonderful thing about trading. You bring it with you. The only thing is my eyeballs fall out of my head because I'm using 3 monitors here and they're all portable. That'll get you. So we're opening in range in value. What does it mean? This is all in a grid sheet. Prior to putting the first trade on, we have to align ourselves mentally and bring our plan out that fits the condition. And only certain trades are qualified in this condition. The market's in balance. What is likely? A neutral day, that means taking out the first hour's high and low, and a low conviction day. So are we breaking out of the prior day's value area? Well, yes, somewhat. But if we don't stay outside of it, we can roll back in. So we'll just see what it does. And that's the current condition. Now we're going to go into the open, and we're going to go take a look at what's happening. So I'm going to take you from the open. And the reason I do this, now if I get into real time, you guys follow the stream, you know, we'll talk trades as they develop. But to understand how trades develop, you have to start at the beginning because the auction is a dynamic process. It is a developing story. Where are the buyers? Where are the sellers? How does it change? If you can't recognize change, you can't get in alignment. So that's why I do it this way. And if you want to see real-time narration, I have in the library, in the Trader Lab, and by the way, Trader Lab's available to all of you at no cost. I have streams up to 4.5 hours long of real-time narration. I think what you need there is a Barca lounger, and sit down with those, and you can see real-time narration as it unfolds. But let's go with our limited time. So this is the RTH Open right here. What am I looking for? Clueless. But let's talk about what I know. I know this is the last auction. This is my retail price. I know this is the ETH. This is the retail price from yesterday. And I'm in value, so slosh. Now, the problem with this is, which way are we going? North, south. And it can go either way, and you can trade it from either side. Don't forget the higher time frame is up. So, what are we thinking about here? Well, what I was thinking about when I was looking at this, I'm saying, well, we're opening at a fair price, two-sided trade, and the possibility for what's called responsive selling. In other words, imagine you're long from yesterday, okay? And we open and we're sloshing around. Would you take some off the table? Profits. And are there long sitting in here from yesterday that have their stops, below, and we might rotate and take the weak guys out. And if we take the weak hands out, the question becomes, are we going to get buyers? This is the joy of randomness. So let's look. So I'm looking at the open and I'm going, So I have to wait. That's all. I have nothing else I can do with this. I'm going, I don't know. You know? Well, come to Trader Lab. Me, not so much. So here, now I'm very patient in this. I have found that when I'm trading in this context or balance, two-sided trade, I just wait. I don't take a lot of trades in this because I know the condition in balance is outside in trading. But the joy and the thrill of randomness is not knowing where the outside is. And that's why we call it mean reversion, underlining the term mean. Where's this outside edge? Well, I know my value area low is out here, and my ETH low tested the outside. I know this is my fair price from the ETH, the last auction, and I know this is the fair price from yesterday's RTH. I know the higher time frame trend is up. I could trade either side here, but if I take shorts, I'm trading counter trend. Now, here's the other part of the thrill for you guys. There is over about a 98%-ish probability to take out either the ETH high or low. Don't forget, the trend is up. So, and I can get to the value area high and low, and either one of them about 89% probability. So I've got kind of a conflict here. And that's how I was looking at it this morning. I said, well, you could trade it long or short. So let's go just try to see some trades as they develop. Now, right here, now this turns into a short. I didn't have a short here because I can't tell. And right here is the developing volume point of control. What is this? The retail price. So this yellow line moves around with the highest volume as it develops. So if I go down and quote time frame, this process of auction or consolidation is taking place in all time frames and fractals. So this is the retail price in this box. And think of this like it's an auction. I'm not paying that. Yeah, but it's on sale. See the absorption? Iceberg selling, iceberg buying, and in the middle is the volume. And you can see it here. This is now, I'm going down and as you think of time frame. But this has no time attached to it because it's, how long does it take? Well, I don't know. There, it breaks away. Well, I guess this is too high. All right. Here, don't know. Break under here, possibly too high. Okay, this is my first suggestion. Let's come back just a little bit here. Don't forget, this is my RTH open. So right here, going to the moon, don't know, break. The sellers take control here. That's my change. Now I know, and I don't know until hindsight, no foresight here, don't have that, can't predict anything, that this is too high, and my sellers now took control. So this sets up, and I have a high probability statistic sitting down here, okay? So this sets up my first short. Now, how do I get into this thing? Part of the thrill. Well, if I see this is the largest rotation so far. So this suggests that those responders, those longs that are sitting in here, maybe we're going to go here. Because I had, a 98% probability to take out one of these. And since we're going south of the border, it was this. So now I have to get a retracement. So let's look at our levels. We have this. This is my retail price, high volume. I shift here, which says there's more volume here than there. So too high, break low. I'm not paying that. And now back here. I have the mid, I have the VWAP. Now, right here, I'm looking at the short. I'm going, but I'd like to sell it here. Break again. My target is still open. And now retrace. This is my first short. And what am I selling against? This right here, right there. Let's look at this. I'm going to open it up. Now, this is microstructure, as I call it, because what's happening here? Let's talk about what's happening. Sellers took control. You can see the delta. Now, this is in the book. And I'm going to tell you, this is disturbing for me because I know if I come here, these are potentially buyers. This is the limit order book. That's what's over here. And the heat map shows us where the higher liquidity is. And these might be, or probably are, icebergs with orders sitting out there. Well, I know if I come down here and the icebergs buy, I need more sellers to think of it as Pac-Man is the way I think of it. I need the sellers to consume the buyers. Or what's going to happen is the sellers are going to come into the buyers and the buyers are going to consume the sellers, and then we're going to counter rotate. I know that, but I don't know which one. Part of the thrill. So right here, now I want to show you this. I'm coming down, and these are sell sweeps. Often, the word always doesn't exist in this business. Often, when I see the sweeps, I can anticipate a counter rotation. Market doesn't have to do anything. This is part of the joy of randomness. And there's my rotation. When I see the rotation starting, I'm now going to be looking here where I had my sellers, which was there. But it doesn't quite get there. And now I have a chop. Sellers are here. Don't forget, sellers are there. Oh, sorry. Sellers are here. And the sellers take control again. So this is too high. And I rotate again. Now watch. Where's my sellers? Well, my buyers are here. My sellers are there. I break low. So you can see break low, and now, so I can sell this, or I can sell this, and this is my probability is to get down here, okay? And that's kind of what the thought process is, okay? So I get here. Now right here, the teeth chatter. I'm just telling you because I know right here, they can just bounce this thing, and I can come across the range. Why would I think that? Because I'm in balance. Possibility to get squeezed. Because where's the strong side, guys? Isn't it the longs? So I know when I'm trading what I perceive to be counter trend, and I'm trading multiple time frames as you think about it. So I could be short as well as long, but I know who are the shorts. Are they the guys in charge of the trend, or are they responders? In the trading business, we have the strong side or the dominant side, and then we have the counter rotation side or the weak side. Now, the counter rotation can turn into something more meaningful, but at the moment, why are we up here? Because we found too low. We have a gap under us from yesterday. Why does a gap get created? Demand. So trend is up, guys, right? The problem, of course, is where's the low of anything? So we don't know. So I go on the idea that I know I don't know, so I don't predict. I found in the old, well, for me, the old days, and I started in 1980, it was measured moves, classical bar charting, flags, pennants, head and shoulders. Oh, it's going to go here. Measured moves. Well, not really. Doesn't really work that way. Anyway, this is the target. Now, let me show you an order flow trigger. It's right here. Now, this is something that is more advanced because you have to understand the interaction of liquidity and icebergs and participant behavior. So this is that resting liquidity, and this is the liquidity marker. It shows me adds and pulls. So not only do I have the color, but I can see when more comes in. Now, remember what this is. If I don't, Pac-Man, the sellers are here. Well, why is it going to go up from here? Well, if there's the buyers, and there they are consuming the sellers. Right here, I can bounce off it. If I get under it, that means the sellers consumed the buyers, and we're going lower. So this becomes an order flow resistance, okay? So at least that's the way I mentally think about it. Now, right here, we break above it. When we break above it, if this is resistance, resistance can become support. So let's watch. VPOC migration. So this now is the previous retail price. This yellow line is the current retail price in the developing time frame. Now, what I do, and of course it's confusing, everything's confusing. If you can't, this is a language. I don't use indicators. So what I'm doing is reading a language. This is the retail price now in the developing time frame. And down here is support. Now, what I need for this is, where were my sellers? They were there. So here's what's going on. Sellers, buyers, break below, resistance right there, break above. This becomes potential support here, right there. So, and then the trade would fail under here. VPOC migration, potentially lower or to come across. So let's watch. Break under here. So this becomes support. If this here is too high, and this is what the thing about two-sided trade is, then we hold this, we go up, we break this, it becomes resistance, this. So here, and there's my buyers. So this is not a joyous event. This is two-sided. So let's watch. And this liquidity is down here, resting liquidity. Let's watch it. So I have this liquidity here, and this is more complex because of the rotational nature of it. And what I'm trying to do with this, if I'm thinking it's two-sided trade, I'm trying to look for outside edges to get long, okay? So here's the resting liquidity. Same as this, okay? Come down, don't know, test, bounce, support. Same thing as this. And I'm looking for longs here. Now, right here, if you took a long against this, you would take a stop, okay? Here, we break below, watch. And again, this is our support. Break high. Now, the thing on this one, we didn't break high. What we did is, so if you just mechanically bought this, you would take a stop. If it broke high here over this, you would take a stop. So if you bought it here, this one didn't give you a trigger, you would take a stop. This one did give you a trigger, and you'd be buying it here. Your stop, now if I took a long here, my stop has to be under here because this is my protection because I know I have buyers here. If you take a long here, because it would be there, and you put your stop there, you have a good chance of getting stopped out. And I call that a stop pick. Why? We are risk adverse. In your mind, if you go, I don't want to lose more than blank, what does that have to do with trading? Where does that come from? That's your emotional state of fear of loss. Wrong business for fear. We all feel it. So when you make decisions to put a stop there, when it's not technically, depending on your vetting, this is not where the stop goes. Here's why. You see the buyers here? If we pick the stops off down here, and there's 289 coming out, thank you. Will these buyers and the guys who are sitting here, the liquidity, the icebergs, if they think this is a good deal, isn't this a little more of a sale? Oh, they lowered it 15 cents. Throw another couple in the cart. That's what that is. So for me, my stop's got to be under here. So if I get in my locations a little off, which it is, there's no perfection, I'm not putting my stop with the rest of the crowd. Write this down. Think like a retail trader. Don't act like one. By the way, if you have questions, post them. If you're in YouTube, please give a like if you're hanging out. I'm going to try to move along as quickly as I can. But what's hard about this kind of trade is you're very subject to FOMO and you're very subject to getting yourself twisted in the wind. So it takes extreme patience, and it's not about chasing the market around. You can obliterate yourself doing that. The advantage for developing traders is to know where your trades show up and to also know that if the market runs away from you, you will have other opportunities. Not being controlled by your emotions, because your emotions are going to be ultimately the thing that might take you out of the business. I believe anyone who comes to Trader Lab can learn how to trade, but if you don't know how about yourself, you're going to have a hard time. So this is an order flow trigger right here. Break high, and don't forget we got our target. And then this is called mean reversion. Underline the term mean. And this is the mean. So if you got long in here, you're just trying to go here. And then rotation, possibly out the top. VPOC migration, too low. What this is telling us here is this price is too low. And now the shorts at the opening swing high, they're on the chopping block. This is how this thing works. Now we come up here. This is a hard trade now, but this gives us some insight. There's a buy sweep. Often when we get a buy sweep, we get a potential counter rotation. So this is a short. Now, the thing about this is a very hard trade unless you're familiar with it. Let's look at it. So I have resting liquidity, I have liquidity, and no clue. Okay? Nobody knows. Let's not worry about knowing anything. We don't know. Sweep, going to the moon. See the sellers take over here. So when we're going up, it's just buyer, 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 buyer. Where's your seller? I don't know. There's my sweep. Where's my seller? I don't know. Change. Now, here's what I know. Sweep, change, downside rotation. What else do I know? This is the fair price, and I'm in a two-sided market. That's what I know. I know the higher time frame is up. I know I'm not far from the all-time high. I know I got responsive selling, most likely the weak hands coming out. And I know at the moment I'm in two-sided trade. Now, the other part of this is I could, now this will twist your brain a little bit because this is time frame oriented. You could be taking shorts in a rotational environment if that's your plan, or if you're aligning with the higher time frame, you're only taking longs and you're using the shorts for trade management or for nothing. You know, you're just ignoring it and you're sitting through the rotations. That's trade plan specific. So I can't tell you what the right thing is for you. We in Trader Lab, the traders, many different traders doing different time frames. The process is somewhat generic in the sense of how the market works, but time frame is a different thing. So some traders will use this for trade management as an exit because it's a short. Other traders will take it as a short, and other traders will see the short, do nothing, and wait for the long to align with the more dominant side. Now, I'm giving you the choices because it's time frame reflective, not mechanical. So you know when you come to the market what you're going to do. You don't know what the market's going to do. Part of the thrill. So let's look at the trigger. Right there. This is an auction in a multiple time frame. Think vertical integration of time frames. I think of them like Matryoshka dolls, you know, the Russian dolls, they're inside each other. I don't use time in the developing time frame. So you guys might use 30, 60 minute, 15, doesn't matter, 5. You know, I'm looking at it right here because whatever time it takes for one side to take over control is the time. So in the auction, what's too high? So where are my buyers? They're right there. And where are my sellers? They're there. Where does the condition change? Here. What is this? Here's a simple analogy, and I always say don't get offended. These are stores. What is a store? It's a shopping environment. When you go to the store, there's the supermarket, which is called this a developing daily time frame. I'm using the term not relative to time, just for you. And up here is a shorter time frame. And it's an auction. So this is like your store down the street, you know, the mini mart thing. The buyers are here. The sellers are there. The retail price is here because the high volume is there. It looks like this. So too high, too low, retail. But what happens if the volume where the buyers and sellers are interacting becomes unfair? And they get in the car and they leave the store. So what does that tell us? The buyers were here. That's why it went up. Don't forget the sweep. Interacted with some liquidity. Who knows? Selling icebergs. Sellers take control. You know the old saying, support becomes resistance. This is a short. Now, if you took this as a reversion trade, you're only trying to go here, which is no problem, right? Is there enough range from here, and your risk is out here, okay, to go there to get risk neutral. And then you're looking for it to come across the range. And you have to be aware of this down here also. Let's see what it does. VPOC migration. So we're in a two-sided trade. So this trade is a short to there for your scale and then down the food chain. Now, the thing is, what do we know here? This retail price was too low. Let's see what it does. I don't know. You want? Now, let's come back. So here is where we found our buyers. The volume in here, let's go back to, and this is more complex, guys, because you have to always look left. What happened over here? My buyers are here. Hold on. And the thing about this is, when you have to interpret what is this is a language. I don't use indicators. I had to figure out how to read the market. And this is no different than playing a musical instrument. And let's go back to what we know. Sellers are here. Buyers are here. So let's go take a look. Sellers are, I'm going to draw a little box around this to help you see what it looks like. Same as what was up on top. Sellers are there. Buyers are here. The buyers take over. This is the opposite of what was on the top. Now, what is sitting here? The high volume. Going to draw a little line. Let's just go back to what was on top. Well, just look. See the break and the test? Well, now I've got the same thing, the break and the test. So if I come back down, where was it? Too low. Here, and there's the high volume. You see, kind of get the sense of this thing? Does that make sense, guys? Nicholas, the low volume node is something to be aware of from yesterday, but it's there. It's there is no wall or anything. I'm looking at this, and the reason I can look at this area is because I already know what happened here. I know there's buyers here. I know this liquidity was here, and I know buyers took control here. This is the change. So when I get the change, subject to my plan, I could be getting long there to come across the range, or I could just be getting long here on the counter rotations. I can trade either side. And the thing for developing traders is get aligned with the dominant side and skip the shorts. Use the shorts for trade management. Up to each individual trader. It's not up to me, right? I'm just showing you how market mechanics work. Notice the behavior here. See? You got a reaction. This is where the sellers were. Sellers were here. So it can either come back here or, if the market is short and the higher time is up, higher time frame, we can come out the top. We come out the top, and this is called the IB. The IB has about a 98% probability to take out today's first hour's high or low. We also have an 82%-ish probability to take out yesterday's high or low. Well, I don't think we're taking out yesterday's low. What do you think? So that kind of gives us a lean to the upside, and there's the single. So and this was our primary target from yesterday, okay? So let's watch. So we have, this is a sweep. This is our liquidity. This right here, actually at 9:30, it's right, where is this? I got to show you, there's a long over here someplace. Yeah, here it is. Yeah, here. This is the first hour's high where we had the sellers. What I know about this is there's going to be buy stops at the top of this downward rotation. If I come back up here and I break through right here, I can buy this to go here. That has an 82% probability. So I have over a 90-ish% probability to take this out. So if I'm taking longs down here, and I'm not saying anybody should, I know I have a high probability of taking this out and a high probability of getting there. And then after that, I don't know anything. Okay, everybody see that. So let's say I don't take this because I have the sellers where? Here. So I have to get over this and this to go there. So this is the range. Do you have enough range to get long? Great question. And you got resting liquidity. Let's just see the behavior. Liquidity trigger. Is this a short? Let's see. Liquidity trigger. Break high, break under it. You can't. Now, when I say is it a short, it might be an exit. This is the two-sided trade, and you could really do damage to yourself if you don't understand it. Low volume node, outside edge. So what did we do up here? Let's look. I'm not paying that. Yeah, it's on sale. High volume is there. Going to put a little line. So too high, and this is your outside edge. It's there. Okay. I'm just going to throw another line. There's going to be a lot of lines running around here. So outside edge. So if this is too high, the buyers were here. Sellers took control. This now becomes resistance. This is the mid. So let's just see what it does. Trend is up, don't forget. VPOC migration. So basically, you've got two-sided trade here. So the dominant side is the longs. Now, this is important. This now, it's called VPOC migration. Remember, this is now, and we're above yesterday's high. That's important. This is the new retail price in the developing daily time frame. This is yesterday's retail price. We are above it. So this says at the moment, this is worth more. Now, and we're above yesterday's high. What do we do with this? Well, maybe longs only. And we have a couple of structured trades we can look at here, not recommendations. Out here, is an outside edge and out here. So we have a couple locations. We have this location to observe, and this would become a reversion trade, and out here for reversion, except you don't have range. So let's take a look at this. Now I have to turn a few levels on from Investor RT so we can get some real-time levels here in Bookmap. They are exported from Investor RT. Very cool. I just lost the chat. Very nice. Hold on, guys. A little challenging on a laptop. Okay. And now I got to try to get Discord back. Okay, I'm back. All right, guys. Questions? Now, this kind of trade requires extreme patience. And if you don't have more than one trade, or you even have no trades, have you ever thought about you're not here to make something happen? You're here for edge, and you're going to take stops. Of course, I do. I take them, and I don't like them. What's there to like about paying a bill? But you know, the casinos who operate with edge also pay the gamblers, and they seem to be okay with that. And we're going to have to pay them also. And there's going to be days we lose, they win. Okay, you know, that's just trading. But what do I know? This is my outside edge here, and this is the mean. The context now, which is still two-sided, is rotational trading. But what's the problem at the moment? The auction doesn't care about range. We do. This is called mean reversion, stressing the term mean. And the problem with mean reversion, maybe it's not a problem, it's just a challenge, is the outside edge. This is the outside edge. If I had more range, like out here, then I'd have a better opportunity for buying my stop on my runner. When it comes out here, I don't have range. So unless you can execute on the head of a pin, you'd be getting long here. Well, 83 to 83.75 for me, it makes it a trade I wouldn't take. And the reason is it doesn't matter, at least to me, where this thing goes. You know, 90 is the next target, by the way, because I can't get risk neutral. This is the mean. So if I'm trading reversion, I need enough meat on the bone. So if this low volume node, and what is a low volume node? Oh, it's on sale. Retail. I'm not paying that kind of thing. So if it was out here on sale, now I can get from 78 to let's say 83, 84. I can get my risk off and then manage a runner. So I'm only talking about me. I'm not talking about you. But I'm going to give you the rationale for not responding to FOMO, because this could just go up here and you probably get in about there, bounce, and then come further outside, you see? And it would still be okay if it came out here. This is another low volume area. What created it? Too high, too low, retail. Right here. That for me would be the location. If it only gets out here, too low, too high, retail, I don't trade it. And that's not a recommendation. I'm just telling you that's what I do. I have patience, discipline, and detachment. Now, we are typically attached. Oh, I don't want to miss it. I got to make money. No, not the business. The casinos don't change their game. They just play by certain rules that are anchored inputs that give them a statistical edge, right? Isn't that how they work? They play the game the same way. Well, for me, my game, if it's reversion, has to meet certain parameters. I'm not going to change the game because I want to win. I'm going to just keep doing what fits my edge. And if my edge doesn't show up, why am I going to put myself in a place where the other gamblers have the edge and I don't? Does that make sense? This is not about, we're not hourly workers. We're sitting in a casino and we want to be the house so that over time, the dollars come to our side of the table. And yeah, we're still going to pay the gamblers when everything is in alignment. Does that make sense? So I'm not here to be busy, and professional traders, I'm going to say, are not in the busy business. Oh, I got to have something to do. I can go out and mow the lawn, or I can do some trades. I think I prefer trading. Well, all right. You might be more profitable to go mow the lawn. Is this making some sense, guys? This is Trader Lab. Now, this might be the most boring thing in the world for you, but I kind of think we're in a business. And the idea of this business is to create sustainability. Now, we are looking for the potential to get to the all-time high. Maybe today, maybe never. Who knows? 90 is the next target, by the way. Here's the all-time high. And this is where the news came in on the tariff, the Friday Acapulco cliff dive from, I guess it's a week ago, where on Truth Social was posted a 100% tariff and all this crazy stuff, and the market did the tanking. Well, now we're coming back. So with the market, and on that day, was looking for a new all-time high, but this is a news. It disrupts the auction. So the auction goes, what does that mean? And then it interprets what it means, and then potentially comes back to where it was. So this is where we're looking to go. Doesn't mean it'll ever get there. Remember, that's not our job. Our job is alignment. That's the 90. This is the all-time high. This was the gap under us. This was yesterday's retail price. What's above us? This. And this is the Acapulco cliff dive. That was that Friday. So you could see we're right up here when this all happened. Probably around here somewhere. So 90, maybe. And the best you have in this business is maybe, right? So if you're in the casino and you're the dealer and you're the house, maybe if you play your edge and the cards coming out of the deck are random, the way gamblers play their cards is random, the only control you have is the game you play. And if you're in the business, you're not changing the game. The only way that you extract your statistical edge is anchored inputs. And I did a primary webinar on this in the Trader Lab, and the Trader Lab is available to all of you at no cost. That primer webinar talks about anchored inputs versus random inputs. Anchored inputs are really structured games. Blackjack is a structured game. The control leaves the dealer when the cards come out of the deck. That's their control. The rest is all random and based on statistical probabilities. The randomness of the cards, the randomness of the gambler's play. Gamblers still get paid. But over time, in a random distribution of outcomes, because all the elements after the cards are dealt are random, it's the dealer or the house still is playing with an edge. So over time, the dollars roll to move across the table to the house, even though they pay the gamblers, and also the outcome of any hand, or for us, any trade is random. So our human nature is to abandon what might have an edge and seek out the certainty. So what most retail traders don't understand is the decisions they make are decided by what they believe. They believe that there's a short answer. In other words, the Cliff Notes. You guys ever heard of Cliff Notes? It's like the summary. Oh, here's something here. Let's try this. I go out on YouTube and look around at times. You probably do too. And I see the only 3 setups you need. I see this stuff and I just want to, go after somebody with my baseball bat because it's, let's just say it's not credible. It's nonsense. And of course, don't forget the affiliate links. So you could click, pay. That's really what this is about now. The YouTube world and internet world has become really a marketing platform. And it appeals to retail trader compulsion for certainty. So the wiring you have leads you to jump from chat to chat, setup to setup, guru to guru, and you can spend your developing career throwing dollars out the window and wasting your time. Now, that's for you to decide. But you need to understand the psychological mechanisms that cause you to make decisions. And most of us never understand ourselves, what motivates us. So even if you have a credible educator, and I'm not saying I'm the solution for you, but I'm saying if you even had one, you wouldn't even know it because you're not going to have the patience. If you don't have patience, then you actually have FOMO. You understand the manifestations of FOMO. I'm going to say most of you probably don't because you've never thought about it. You've heard about it, and you may know about elements of it, but you don't understand how deep it is part of our primal wiring and how it shapes your life. You see, you don't understand it. So psychology is a much deeper element. In fact, we have a psychologist in the Trader Lab, J.J. Marks, and whenever I can persuade him, he posts about the psychological elements. So he's in Trader Lab, but he doesn't bring his own couch with him, so you got to bring your own. How we doing? You guys doing all right? Track traders asking me when I get a trigger and the price rotates back to my entry prices, there's something you look for to not enter. No, I don't know if it has to be at a location track. So triggers on their own are just structures. What you need when you have a trigger is location. Trades are like real estate. Location, location. It's a priority of input. So if we're in a rotational trade with an upward bias, developing traders, and this is something where trade plan comes in, should only be trading from one side, and that's the long side. So you wouldn't fade it. You would use, and I always say, and again, this has to be built out. You would use sell triggers subject to your plan as exits as part of trade management. Or here, and I have to give you the or because it's not my plan, it's your plan, and you're going to find what resonates with you and also fits you psychologically. I have to have a location for a trade. Just like I was talking about this long here. I don't have a location. How do I get long here? Where am I going to get long? I got liquidity here. By the time I get in this thing, I'm going to be here. You know, I can't respond until this breaks. Because right here, let's look at this one. Right here is sellers, buyers, micro volume, break low. That is resistance right there in the micro. When I break high, where's my pullback? I don't get one. I can't get in here, you see? So I'm just saying location wise. Now the nature of the trade is exactly this, but I need the range and I need the trigger. This is not a trigger. It's a trigger without the test. You'll notice if we just call this a trigger as an example, and the buyers were right there when I trigger, and this is micro, guys. This is not really workable. I'm just showing you an idea. That's resistance. When I break here, I really don't, what am I going to do with this? It's going to be here before I'm conscious of it. But that's where I have to scale. So I can't get in there. You see? So nothing for me to do. So this is the only place. So there's no qualified trade for me here. The location would be out here. This is not qualified. 90 is the target. Now, there is another trade here, but this is really out there a bit. What it is, and this is advanced, we have a sweep here which sets up a counter rotation. Remember, out here. We have absorption here. We have a sweep here. Not counter rotation. And we're looking for up. We get down. We come here. Now, this is called VPOC migration, and we're outside of the IB. This is a reversion trade, but again, this is not qualified. The other part of this is this can lead to extension. Again, it's not a trade I would take. Some traders will take it. I don't take this trade unless we're in a more of a trending market. This is rotational still, so it's not a qualified trade for me. It would be under slightly different conditions, but it's not a trade I would take. Other traders are mechanical. That's their business. If you vet this, it may or may not have an edge. I don't trade it here. Other times, yes. And that's, again, when I talk about trades I might take, they're not the same trades you might take. You may take this trade every day, and it might be a fabulous trade. It's not my trade in this condition. Doesn't matter. James has asked me if lunchtime tends to be more reverting. Yeah, it is. Because, well, it used to be. I couldn't tell you. Back in the day, all my buddies were floor traders. They all go to lunch. And the book, the liquidity, would thin out. And it's kind of like asphalt. These are like pebbles, the limit order book. Pebbles. So it's rougher. There's more liquidity to absorb. When it thins out, and it used to thin out on the floor, the market can move more smoother because there's less obstruction, if that makes sense. So lunchtime, I kind of built the trade out, which I called the IBF now, but back then it was K-trade because it was 12:30 Central Time, and that's when the guys, they'd all go to lunch. And it was in K was a period in the Central Time Zone where I was in Chicago, or still am, but not at the moment. And that would be a reversion trade. So it was called the IB failure, or IBF. Eventually I renamed it. I called it K-trade. But it would come in under the first hour and then rotate back to the mean and maybe to the other side of balance. So it was a counter trend reversion trade. But it started out as a lunchtime trade. So that's a good question, Jim. So you can see it kind of happening right here, So this is why I wouldn't take a long here. And it might be the trade of the century. Again, I just work with edge, and I am not a mechanical trader. So for me, certain trades are qualified in certain conditions, and other trades are not. And so I have to be okay with this right here is a long that's going to go up and make a new all-time high, and I'm not in it. Emotionally, I'm going to have the voice in my head that says you shoulda. You should have got long there. Hindsight's 20/20. The lunatic under the hood, who I call Hyde, is going to, scold me. You shoulda. But the fact of the matter is, I shoulda nada, because my plan says don't. That's not your trade, so I don't. I found that it's more important to be here for tomorrow and to have a positive equity curve than it is to break rules, violate my plan over one random event. See? So it's the emotional state is going to say, you got to get it, fear of, FOMO, right? Natural, primal tendency not to let it get away. I got to bring food back to the cave, right? Oh, but I got to be certain that I'm not going to get eaten by the saber-toothed tiger. What a conflict. Why is shoulda thinking? I'm sure, Truman, I'm not sure what you're saying. Why is shoulda thinking so toxic? Well, shoulda's hindsight. Shoulda doesn't do you any good because we can't operate in hindsight. We have to operate right here. So the shoulda thing is reinforcing the breaking of your plan and your statistical edge, which needs to be vetted before anyone puts a trade on. Because if you don't know where to trade, why, and that you have an edge, even though you're going to take stops with an edge, why would you gamble? I would say if traders are going to gamble, they should go to the casinos because it is entertainment then. Video game, doesn't matter. And then you get the cocktails and the ticket to the buffet. You know you're gambling. It's entertainment. This is a business, so if we approach it not as a video game, then we have to understand the emotional triggers that will interfere with our ability to create sustainability. So understanding the self, the you, and you will not discover who you are until you come in this business because you never needed to battle with your primal wiring, which is basically avoid risk and create certainty. And we're in a business that's the exact opposite. There is no certainty, and we have to take risk. We get rewarded by operating in the unknown. So the only thing we can know in this business is probabilities. We cannot know the outcome of anything. So that's why I know I cannot get long there. And it doesn't matter what happens here, you see. And again, if it goes and makes a new all-time high, I potentially will have other ways to participate. So, and if I don't have any further trades for today, perchance, I have to go, well, I follow my plan. How do I stay in business? Well, I follow my plan, not chase the market around. That's all I can tell you. So, and like here, this pullback here, this might be your support. I got to clear this, and then I can continue to 90. 90 is the next potential location. I don't have an entry. Well, I don't have anything to do. That's me. Other traders in Trader Lab are going to be taking this. They're going to be taking this because they hopefully vetted it and they have an edge. I just would not trade it. But I have a different perspective on this. I've taken thousands and thousands of trades. I started in 1980. So I get much more detached and much more patient. And it doesn't mean I'm not an active trader. It means I want everything to be leaning my way. And even then I will take stops. So it's not about the stops. It's about maximizing my opportunity for the cost of the stop, if that makes sense. So I try to trade larger rotations. So I don't really do much of this kind of a thing. Unless it's further outside, then yeah, then I'd be along here. But if it didn't come out, then I don't have a way. How we do it in YouTube, guys? Saved by charts, I don't know what that means. Orders resting a level should be triggered to go reverse or not. If you're asking me because there's this liquidity sitting over here, is that a fade? No, it's just an obstacle. And you'll notice this is resistance at the moment. If I can get through these sellers or they pull and it holds, then it would take us up to the next level. It's not a long. My long would be out here. So I have no long trades here. I have, what I don't have for this is the location. I have everything else. I have the direction. I have this, and I even have this and this. Everything in this trade is a long, so no shorts, but I don't have an entry. The last entry was down here. Here. So this is the last way in. The last entry is this. So in the outside, and then we get our migration. This is the only place, and it's not qualified. So I'm just telling you that's, and I've spent some time with this. This is mean reversion without a qualifying range. So what you can kind of glean from this is a structured trade, but it has to meet certain parameters. So the parameters are context is up. We've taken out the first hour. We're in a higher time frame uptrend. Next target is up here at 90, and then maybe the all-time high, or maybe not. Whatever it does, not important. You see, so out here. But in the meantime, how do you get long? Well, other than out here and this would be a long if we had gotten below here and out here. So That's all I can tell you about it. This is a non-qualified loan, but everything else is in gear. Does that make sense? Yeah, JTrade, my setup available or Taunton, yeah, everything is in TraderLab. Document section, um, a library of webinars, in the community. There's no cost for this. The TraderLab is a community of like-minded traders who come together. It's not about me. TraderLab's really about you. I'm just a trader. I've been doing this 46 years professionally and out here with you. But what's mostly important about this is I've done everything you've done and regretfully spent more time doing more of it because I had more time. Okay? This is the TraderLab community. It's interactive. It's serious. It's about the business of trading. Um, oh, a lot going on, charts, interaction, and the library of webinars. Interaction, mutual support. You need, and it's a serious community. It's not, as I'd like to say, it's not romper room. Okay, this is really business. So, and let me show you what the library of webinars looks like. Ned, thanks for curating this. The primer webinar talks about anchored inputs. And it's really important to understand, most of you are using variable inputs, multiple indicators, multiple time frames. That's like random inputs in a random environment. Think about it. Casinos only play games with anchored inputs. They're not changing the game. They just blackjack 7 cards. They cut the deck a certain way. Boom, bang, that's it. Because everything outside of what they do is random. If we accept that our market and the interaction of the participants is random, all we have control of is our plan and what we do. So the plan is the control, not the outcome. That's what this is. Meet the TraderLab. What is this that we're doing? What about all-time highs? How do you operate in the market that is where you don't have reference points? Stop gambling, start winning. Day trading, why most traders using indicators fail. You might be interested in that. Trapped in Trader Groundhog Day. That was me for many years. Trader Groundhog Day, I came up with the term and it was for myself. Groundhog Day is working hard, waking up in the same place. You have winning trades. That's not the problem. But they're random. Gamblers have winning hands, you see, but you're leaking equity. So your account balance is going down in spite of the winning trades or even multiple winning trades. That's Trader Groundhog Day, So you need to understand the difference. Notice our target was 90, right? So, and now we have a sweep. So we have to see the behavior here. And you never know where the high of the day is going to be. We do understand market behavior, and it's not predictive. It's location-based. This high volume, let's see if I can get this for you, is coming there. That's the 90. So when we're coming, and this is yesterday, so coming up here, this is our next high volume area. This is in an intermediate time frame of consolidation. The buyers were there, too low, and the sellers were here, all-time high. I'm not paying that. Then we have the China Acapulco cliff dive, and then we consolidate, two-sided trade. This was a target down here, if you guys remember. Then we had other targets. I don't have all of this on here for you because this is intermediate time frame. But the higher time frame is doing what? North. Interruption, news. What does that mean? I don't know. And then back, and now back to where the disruption was. 90. Now, if I get above 90, I got all-time high. If I don't, then we can rotate. So I already know 90, that area, important. How do I know? Marga's asking me, how do I know if it's going to be a sideways range day or not? Well, initially, it started out as a rotational day. When it changes its condition on a shorter time frame basis or developing intraday time frame, then it takes the shorts off the table. Now, for me, couple ways, and when I say me, I'm saying for developing traders, a few ways to work this, and that is you're only taking longs, and you're avoiding the shorts, or you trade from either side, or you're using the shorts to get out of longs. So this is where trade plan comes in. But how to tell? It's where the sellers get taken over. In other words, if we had sellers and the market counter rotated, when I come back to those sellers, what happens? Well, right here, as an example, says counter rotation. I have a buy sweep. But where's my support? My support is out there. Sweep. It's out here. This is the last place I might have gotten long. And again, I know, but it didn't qualify, so I can't take a long, even though 90 was my target. So I don't take the trade. I just go, well, next. This is like waiting for a bus. So anyway, Mark, when it got outside of the IB, and we were kind of thinking it was going to squeeze because the trend is up. So for me, this was the last qualified long was out in here. And if you took this long, subject to time frame, you're going for 90 because that's the target. And this would have been another one, except it's not outside. Now, notice what's going on here. Where's our outside edge? Now, here's the other piece. Stops are here. Stops are here. And this is going to be the outside edge, and it's not a recommendation. And stops are under here. So if I was going to look for a continuation trade, my objective, and this is not a recommendation, would be to find the long out here, if it qualifies, to come back there. That's the reversion. And then to potentially come back here to this area for another target. And I'm running out of time. We'll see what it does. And guys, these are not trade recommendations, okay? This is, maybe. Does that make sense? By the way, if you're visiting in YouTube, please give a like. By the way, there is, here's our location, right? Not a recommendation. Here, let's come back to this thing while we're here. Stops are here. Buyers took control there. Right here. Sell sweep. And where are we going to try to go? There. Not a recommendation. This is mean reversion, underlining the term mean. Sweep, location. This was the outside edge. Now, all trades take stops, so let's get over it. And this is not a recommendation. The idea of this trade is to look for an outside edge, which is out in here, LVN, to come back there. This is reversion trading, just so you can kind of see it, all right? And that doesn't mean anything. That's why these aren't trade recommendations. Why would you want to take my stops? I don't want to take yours. I can take my own. But what I understand is location, and there's stops under here. So if I can get under here, I have a sweep, and I can't put my stop right here. I need to be a little further away because I have to be careful. I got the VWAP in the mid. All right. If I come further outside and I have to be away from this, I'm still looking to come back here. Now, if I take a stop here and it comes further outside, it doesn't mean I wouldn't put the trade back on again and take the same trade to come back here. I have to be aware that I've gotten to my primary target. So what I would be looking for is outside here. Now, the outside is tricky because that's the reversion, and there's nothing mechanical. You have to have your stops away. So the idea of this is to come there and test there and maybe go higher or maybe not. The trade doesn't work, you take a stop. That's all there is to this. Let's try to see. Remember, outside is here, here. So I want to try. So I always have to look left. If the buyers were here, the stops are going to be under this swing. So the stops are there and there. So if I have retail traders, write this down. Think like a retail trader. Don't act like one. They got their stops under here. So if we're coming outside, and this is the VWAP in the mid, if I can get outside enough, I want to try to come back here. So that's this trade. Not saying it's good, not saying it's bad. I'm saying it's only a trade. It's nothing more. And then this is where you're trying to go. Okay. This is called mean reversion. And the reason I call it mean and everybody else does is it's mean. Where's the outside edge? And that's what will rattle your brain. So how do you identify the outside edge? You got to look at where this, you got to look left, because that's where the change took place here. And here. That's where we pulled back to where the sellers were, which becomes support. And then we had our up leg. Now, if we come down, and this is pretty good selling right here, if we can consolidate and break high, we're trying to come here. That's the best you got in this trade. That's all I can tell you about it. I don't use those levels, Ron, the GEX levels. You can. I don't. I mean, to me, and those to be material, I know traders use them, but I don't relate to them the same way other traders do. I kind of let my thing is reading the participant behavior. I know right here that there's absorption. I see my sellers. I see at the moment right here a buying iceberg absorbing that seller. The only thing, what I need to see here is I need to see less selling so I can see more absorption. Now, if I keep seeing the selling here, the trades are going to keep going south. So I need to see buyers take over in this area for it to go higher. If I don't get that, then the trade's just going to keep going. That's what I know. So right here is pretty important. Now I'm running out of time, guys. I only got 2 minutes. So you guys need to observe this. See if you can interpret what you see. So let's see what we have. The market's going lower. I have less selling, which means absorption. Less selling, lower price. So far, delta divergence. Isn't that what delta divergence is? So let's try to see here. So what we want to see over here, if this thing is going to work, which clueless, right? Not ignorant, just clueless. I mean, it's random. Is what happens here. Am I going to get more selling? Then I'm going to keep going down. And that's what is happening at the moment. What I want to see is less. I'm getting more. So it looks like the train might be going lower. I am seeing, well, this is important what happens in here. We got the mid, we got the VWAP, we're out in an area, and it looks like it's going to head lower. But if I get divergence here, I'd still be looking at this. And again, the challenge with the reversion trading, which is what this is where's the outside? So whenever I'm reversion trading, my stops are a bit larger. Because I don't know where the outside is. So I'm trying to hide behind structure. Let's go back here. This is an outside edge over here. I have to be looking left. So if it keeps going down, then, say la guerre, as they say. Anyway, I'm out of time. I am still looking for reversion. It doesn't mean it won't just fall out the bottom. Okay? So you guys can watch that. Please give a like. Mean reversion, we don't call it mean for nothing. And we might just fall out. Remember, this on a day like today can be two-sided trade. You could be back in your Barca lounger here. You don't need to be trading this. This could be a reversion trade. Remember where the primary target was, say. So if you're trying to get long and we don't revert, then it's possible we fall out the bottom because it is a two-sided trade. So this trade here might fail. It looks like it is because I'm getting more selling. We've had some absorption here, but now the sellers are back in control. So this trade would go, as they say, to the happy hunting ground. Thanks for visiting. Hope you got something out of today. This is the real world. And remember, the context suggests the possibility for a two-sided trade or a neutral day. Top of the stream. What's a neutral day? Taking out the first hour's high and the first hour's low. Okay? Thanks again, guys. Thanks for visiting Trader Lab. Please give a like on the way out. Come to Trader Lab. Use the link in the bottom of YouTube. There's no cost. Say hi. There's a library of webinars, a document section, and also you feel free to review the streams that are up in YouTube world. And you may find a lot of good information. The real world of trading is probably not what we want it to be. I know I just want to have an ATM in the basement, but the reality of trading is the outcome of any individual trade is random. It's about your edge, knowing where your edge might show up, having the discipline, and also knowing what changes. And if I come outside, and this was my last area, if I'm outside of here, then I'm looking for the stops down here. Not a recommendation, but that's what I know. I don't know what's going to happen after that. Thanks, guys. Don't forget the like. Look forward to seeing you tomorrow, and thanks for visiting the Trader Lab today. See you soon.